Hi, this is Rob Booker, and I'm glad you've joined us today for a special webinar at FX Street.
It is absolutely the best conference of the year of its type. It's the best expo, the best conference, the best meeting of traders in the world. And I've said that every year, and it's been the case every single year that I've been. We're going to speak to you about both of these things today. So today's a special webinar that combines some discussion about the market, and Gonzalo also will discuss and have some conversation about the experience
attending the ITC from the beginning, from 2007, same as Rob. And each year, although different in the, it's every year the expectations are big and are surpassed by the experience. It has been great so far. Very, very interesting experience.
All right. Thanks, Gonzalo. One more note about that. This year, there are a number of ridiculously fantastic speakers that are going to be at the ITC. And they're not just speakers, but they're also traders. Over the course of the 2 or 3 days that we meet, a considerable amount of time, actually most of the time spent all sessions and 2 hours at a time. So just the markets. He's on CNBC and Bloomberg all the time. But he actually also has a trading account, and he's actually going to bring it, and he's actually going to trade it, and all the questions he's doing. But the same is going to be true of every of them, what kind of chart they look at, what kind of currency pairs they're focused on, how they set their charts up, how they plan their trades. And every year it gets better. There's just no question at all. It gets better every single year that we do this. The quality of instruction is better, and the quality of the speakers is fantastic. One of my favorite parts is the panel discussion at the end, where the traders get together and we speak about what we see coming up in the markets ahead. Last year in October, we had a bit of an argument at the front of the panel discussion, where just about everybody except for me said that they thought the euro dollar was likely to go up. I think Ashraf, Lottie, and I agreed that the euro could possibly go down. But I had a discussion with one of the members of the panel that thought that the euro might go up to $1.75. What's great about the ITC is you can see that wide range of opinions about the markets, and then you can plan your own trade. Both speakers. We'll skip out more about that in a minute, but I can't wait. And there is a limited time now, and I'm not joking around when I say this is the opportunity of your trading lifetime. There are a limited number of the inexpensive seats left for this year's ITC, and I strongly encourage you to go. I went 4 years ago to the first one, or whatever, how many years ago it was now, and there are traders that I met and assembled into a team there in my live trading group that have been in touch with each other and trade together every day still. They're still in touch. And then there's Martin Walker, and then there's Fred Netto, and then there's Ricardo, and then there's Jahan Zeb and Greg Kendall and Sue Ebert and Gonzalo, of course. And I'm still in touch with a large number of people from these conferences over the year. They stay in touch, they trade together, they meet each other, they discuss things, they go out together, they trade live together in these small groups. There's nothing like it. There's no expo in the world that puts these groups together in small sessions. There's no group in the world that lets just like it. There just isn't anything like Barcelona, which is also my favorite city on earth. It is the best food city in the world. It is one of the best places to go in the world. Not to mention, you'll be hosted by FX Street, which is the greatest collection of kindest, most generous people in the world with respect to Forex. You will feel treated like royalty. Do we have any objections to me now diving into some charts and then coming back to the FX Street Traders Conference in a bit? I want to dive into the charts and I want to talk about some stuff. Let's go charts. Let's do it. We'll come back to the ITC later because there's some things that I need to tell you that are special. I'm going to turn off the screen sharing and then I'm going to turn it back on in a moment, and we're going to have a conversation about this. I'm sure Ed Ponzi could speak about this more intelligently than I could, and he's one of the smartest people in the business, and one of the people I would consider my friends in this business. I don't know why he doesn't get me on CNBC Australia, other than the fact that I'm always wearing a swimsuit, and nothing that I wear is appropriate for business television. But let me show you what I'm working on right now. Here are some considerations. The Chinese have noted over the weekend that they are going to move back to a currency regime which pegs its currency, the yuan, to a basket of currencies rather than pegs its currency strictly to the US dollar. Now you might think initially that doesn't matter because what difference does it make to you what the Chinese want to do with their currency? And here's how it affects you. The major way that it affects you is that, and I didn't even list this on the chart, on the notes right here, but the Japanese yen is traded as a proxy for the Chinese yuan. What it means is traders often will trade the Japanese yen in place of the Chinese yuan because you can't trade the Chinese yuan. It's outlawed. You can't speculate in the Chinese currency. And for even import-exporters or banks that are allowed to, on the mainland, trade this currency, it trades inside of a band, and it's not allowed to go outside that band. So they make, a band above and a band below, and inside of that band is where the currency pair trades and is allowed to trade inside of that range. Now what they're saying is they're going to widen that band, but that's against the dollar, that band. Now what they're going to do is increase their holdings of euro assets and other assets. They have not designated the exact makeup of the basket, but they're going to change the way that they structure how they peg their currency. Well, that's what they said at least, right? And there's a whole lot of right-wing talk radio nut job people, including, left-wing nut jobs. There's Lindsey Graham of the United States Senate and Charles Schumer of the United States Senate. Both of these people are absolutely, out of their frickin' minds, right? I mean, if they had it their way, we'd revalue the yuan, 100% and completely decimate Walmart and then lay off half of the American population, send our economy into a tailspin and remove the buyer of last resort of American debt and, punish the nation, China, which is about to bail out the Eurozone. So China's economy right now is dictated and propped up by a manufacturing sector that manufactures cheap and revalue upward. If it revalues upward, thing that's going to still have a top is that the Japanese yen is likely to get a boost. The dollar yen in particular is likely to get a boost from that because the Japanese yen is traded as a proxy because Japan sometimes actually even has a trade account surplus with the Chinese. The Chinese manufacturing sector is doing okay, but across the world, manufacturing is being set up wherever it's cheapest. So China isn't necessarily the world's, most important manufacturer for the next 50 years. They're going to be super important, but there are other options now. The Chinese realize that, and they also realize that they're holding a lot of dollars, that those dollars have appreciated, and that it's time to spend those dollars. Think about it for a minute. The dollar just appreciated against the euro from, what was it, 30 cents over the course of the last year and a half? And while the Chinese pegged their currency to the dollar from 2005 to 2008, 2009, what happened then was that the dollar depreciated and then appreciated significantly. We had the dollar, as you all know, just massively improve against the euro in particular. Well, what do the Chinese want to do now? They want to spend some of those valuable dollars in the currency market. Do you think that China does any of this at all? China is going to do favors to Lindsey Graham and Chuck Schumer in the United States Senate. Do you think that those two people scare China? That China's afraid of those people? No, they're not afraid of those people. And they're not doing this because America pressured them or Timothy Geithner is a really mean guy and his head is so big that the Chinese are afraid of it. Look, the guy's head, he has the biggest head of any Treasury Secretary ever. Okay, I'm going to show it again. Here's my browser window. He has an enormous head. It's just huge. It's the largest head I've ever seen on a Treasury Secretary. This is a better picture. Look at it. It's huge. There's all this brain stuff going on in there. I mean, he's probably just thinking Go back to so do you find trying a huge massive because they're afraid of Treasury Secretary? No. They're not afraid of and then at the G20 meeting they're gonna feel or whatever. They're not scared of anything. They have self interest, realize that they're being satiated of out some of those trades. You're gonna close out some of your trades. And it's not that much more complicated. There are other considerations. But if you reduce it to its simplest explanation, if you were sitting on top of $2.4 trillion or $1 billion of U.S. Treasury securities, and you were afraid that you wanted to protect some of your investment and move your stop loss down as a trailing stop loss, you would sell some of that action and you would replace it with something else. And what would you replace it with? Well, you would replace it with something that was undervalued. And what's sort of undervalued now? Well, the euro. The second part of what I want to say here is the Chinese, if they really are going to start buying euros or euro-backed assets, when they say buying euros or buying dollars, they're really buying assets that are backed in that currency. They buy the currency and then they buy stuff. Like they buy European stocks or they buy U.S. stocks, and thereby they're also buying the dollar or the euro. What are they going to buy now? They're going to buy undervalued or crazy undervalued U.S. company stocks, or they're going to buy European stuff, European bonds perhaps. Can you imagine if the Chinese, who are viewed as being the most self-interested, selfish, absolutely intolerable economically nation in the world, if they went out and started buying up unwanted Greek debt to help out with the situation? I mean, they got so much money to spend. And can you imagine that they believe that Greece isn't necessarily going to go under and go bankrupt? So could you believe that the Chinese would do something like that? Well, most people can't, because we've gotten to the point in the media cycle where nobody believes that anybody wants to prop up the euro, and there's no hope in sight for the euro. That's exactly what we were talking about for the US dollar when we were at the ITC last October. Everybody had given up on the dollar again at, $1.45 or whatever it was. And everybody was talking again that there was no hope in sight and that, the dollar was unrescuable and whatever else. And just when that happens is when you see these things turn around. Why? Because people are morons. We're all idiots. We all want to, throw out that we're willing to go short the euro when it's already gone down 30 cents, 3,000 points. Nobody's smart enough to talk about it, early on, right? We're all like willing to discuss it when it's no risk to ourselves. Ed Ponzi's one of the people who will get on TV and tell you what he thinks is going to happen, even if it makes him look like a temporary idiot. He's willing to go out there on a limb and look dumb because he's not worried about looking smart. He's worried about making money. That's what matters, right? You don't want to care about, and the Chinese, you think the Chinese care how they look to people across the world? They're already a communist nation that restricts the freedom of the press and imprisons political people for writing negative articles and can't even let you check your Gmail without censorship. Do you think they care about how they look? No, they care about making money on this trade. At the simplest of all explanations, the euro might find some support at a time when it needs it so desperately by the Chinese. That's possible. So you could see the euro appreciate. Now, there's a lot of other factors at play, and that includes Spanish banks, and everybody's got all this attention being focused on Spanish banks and whether there's German exposure to Spanish banks and whatever else. But how much of this news have we already heard and how much have we not heard? That's the question. And if it does start to fall, is China beginning to accumulate euros, and does that blunt the fall? Just like when the euro Swiss was falling and the Swiss bank was buying euros, how much of that was responsible for the euro not going already all the way down to $1.10? A lot. The Swiss were, and the Swiss don't have as much money as the Chinese. So think about it for a minute. When a central bank advises you that it's going to start diversifying into a currency, that's when that currency has trouble falling to the fundamentally justifiable lows that it would otherwise make. There we go. That's what I have to say so far to set the stage for point number one. Let me set the stage in point number two. Okay, so I've already said all this stuff about China. And, remember, everybody's talking about the Chinese yuan appreciating. Do you think that it's possible that right at the moment when the Chinese say that they're going to let their currency appreciate, that they're ready to sort of release bad economic news that makes the Chinese currency depreciate? I mean, do you think that maybe they waited to announce all this, that they're going to let it float freely until they knew that there might be some bad news, so they don't have to sort of like buy the dollar outright? I mean, do you think that maybe they would wait until the moment when the market's going to do that work for them? Yes. What do you really know about China anyway? What do we really know about their economy and their banks and their exposure to bad loans within their country? What do we really know about the Chinese textile manufacturing sector that's probably going to go bankrupt? Do you think that China was doing a favor to the world, or maybe they were telling you they're going to let their currency appreciate just at the moment when they knew that they wouldn't have to prop it up the same? Here's the Euro-Swiss story, and it's very similar. At the moment when all of planet Earth gives up on a currency pair, you should start to pay attention. The Swiss noted over the weekend that they might be quitting the practice of intervening in the currency. I published a report that I quit, and I posted a note that you have access to and that we'll make sure is available to you. And I basically say that I think the Euro-Swiss is going to go up 1,000 points in the next 10 months, 1,000 pips in the next 10 months. And here's what I want to say. I'm going to explain in 5 minutes, right now in 5 minutes, and I'm going to get back to talking about the ITC for a minute, and then I'm going to look at charts. I'm going to tell you in 5 minutes why I think the Euro Swiss and the Pound Swiss by association will likely rise 1,000 to 2,000 pips within the next 10 months. First, we'll take a thrilling look at the statement that the Swiss National Bank made, and then I'm going to bore the crap out of you. All right, here we go. I think that the Euro Swiss could get all the way up into this range, up into the, let's zoom in here for you, people at home that wear glasses, up into the 1.4800 area. All right. The Swiss did a news conference, and in that news conference, the Swiss said a lot of stuff, but I'm going to focus on a couple things. One, the Swiss said they were going to back off their intervention and allow the Swiss currency to appreciate. They don't want it to appreciate. So do you think that they would say that if they thought that it was going to immediately thereafter fall 1,000 pips? No. They knew that it probably wasn't going to. Number two, the Swiss have what's called the STAB fund. That's the Swiss TARP. It's the Swiss bailout. In English, they said that we don't feel great about UBS buy back all these mortgage-backed securities. We're going to hold these on our books. And we're going to let UBS sit out there without this dead weight on their books. So they're going to continue to hold these currencies that rescued their major banks. In English, they also said, if we don't pay any interest, then people will stop putting their money in the Swiss franc, which will stop it from rising. A rising Swiss franc causes deflation, and to fight deflation, you lower interest rates. That sends the Swiss National Bank buys back government debt at capital. What? The Swiss National Bank doesn't need to step from that. They bank of cash to work in order to make a return, because they were making a return on government bonds. If they lower the interest rate on their own currency or on their own bonds, people sell out of those, and then that money starts to get lent out into the economy, and that charges up the Swiss economy. That's a good thing. That's a really good thing. If it doesn't work, the Swiss will probably intervene all over again. But they're planning on this plan right here doing for them everything they need to be done. In English, the more the Swiss franc is sold, the more the Swiss National Bank sells of its own currency, it holds more euros in particular. That's risky. The Swiss have realized that at some point in time, they're just buying and buying and buying like $200 billion worth of euros. That's about what it is. And they don't want to do that anymore. They're done doing that. Why are they done doing that? For the same reason the Chinese are done doing that. Why would the Swiss stop their practice of intervening and buying the euro? Because they're ready to let that investment appreciate. They don't think that they need to do any more intervention. They've got plenty of euros now, thank you very much. And does the Swiss National Bank operate out of sympathy to other nations? No. They operate out of self-interest, and they're holding 200 billion euros, something like that. And they're operating out of self-defense. They're ready for that to rise. They're ready for the market to let that to rise on its own. Don't think that if the Swiss National Bank stops intervening, that automatically that means that the Euro Swiss is going to go down 1,000 points. Could it go down 1,000 points? Of course. And today we'll talk about where you can get in, where I might think about getting into that trade, and where I might think about getting out of that trade. and where I think the currency might be going and how it might get there. But before we do that, Gonzalo, we're going to talk a little bit about the ITC. Gonzalo, do you want to ask me some questions about the ITC or talk to me a moment about the ITC? I'll answer everybody's questions about the Euro Swiss and the Euro when we get back. But Gonzalo, do you want to, ask me some questions or something like that? It's hard to transfer the mic over. Definable, understandable trading principle, and then answers questions about it. And they share everything that they do. James Chen last year, and they just shared enormous amounts of hours of information rather than 1.5 or whatever. You're likely to see the same. And the lineup of the speakers is absolutely amazing. Timothy Geithner will not be there. So if you're looking for him right now, he's not planning on being there. I made fun of him, so he doesn't want to show up. But this year you have a few speakers that I'm really excited for you to hear. Number one is Boris Schlossberg. If you don't know Boris, he works at GFP's, next to Ashraf Ladi, currency market, just out there. He puts his on the market. I know Todd Gordon. Todd is an exceptional, analyst and will have an enormous amount of information to share, and I greatly respect his opinion. Triffany, was actually, a person that traded with me for a while. And Triffany and I go back quite some time, and she's out on her own now, trading on her own and doing some teaching out on her own. And I know her as a trader. I know her as a person. And Triffany, especially in the small group session, especially when you get the chance to trade with Triffany in a small group setting, it's just something you don't want to miss. It's the only time this year, probably, that I'll do a live seminar at all. It's probably the only live event that I will do at all this year. Cornelius Luca, Suzanne Vega wrote a song about him a few years back, and it was beautiful, and it was called My Name is Luca. I don't know Cornelius Luca from a hole in the ground. I don't know him, but he wrote the original and defining book about the currency markets, and I am absolutely thrilled to say that I've met him. I can't wait to meet him. Chris Capre, I don't know Chris yet. I'm looking forward to get to know him. And Mike, I don't know him either, and I'm looking forward to get to know him as well. This is a lineup of speakers that's impressive, that's going to trade live, that's going to share with you everything that they know, and that is probably going to spend longer than the time slot allotted them to teach you, speak with you, look at what you're doing, comment on it, spend time with you. But most of all, and last of all, the best part of the ITC and the most important part of the ITC is the time you spend together with other traders. You will probably stay in touch with these people for a long time. For example, these three individuals at the front of the group here on this slide, they're still in touch every day, every single day. I know a lot of people from the ITC who have stayed in touch for 3 or 4 years and are still trading together and profitably and still using concepts that they learned at the ITC. It's a special gathering where sometimes people who would travel costs or whatever else, they do it because they want to spend time with traders. Instructors come because FX Street is a credible, legitimate firm that puts on the best conference that you could possibly imagine, where you are definitely going to meet the types of people that are going to help you trade. You take a little piece of what each of these people says and you put it together into something that you can use and take away. And then you get to speak to them and you get to talk to them and you get to talk to the other people in the crowd. I mean, people who come to Barcelona to go to the ITC, part of those people, part of that group, 10 or 20 of those people are already people who are trading successfully. So they're there because they can afford to go to Barcelona and they can afford to be there and they can afford to go to a beautiful city and have a good time. This is going to send me a picture of a falling euro. So hold on. I'm going to stop sharing in a fall. They not already said some of those things. Do I favor the pound Swiss or the euro Swiss? Euro Swiss for a long-term, pound Swiss for a short-term. Don't need any Swank intervening predict of all time. He doesn't predict it. He just reacts to it is what he said, but he's partially not telling you the truth. Ed's actually very good and maybe the best there is. Why isn't Ed going to the ITC? Ed, get your butt in gear and come to the ITC. Dude, the only reason I go every year is I'm waiting for you to come too. Every time the Swiss intervenes, there's been one person out there who I remember having said that the Swiss were likely to intervene soon and you should watch out, and that was Ed Ponzi. So I would defer to Ed Ponzi for when, I think that the Swiss might intervene again. I'm not going to answer that question, but I'm going to let the illustrious Ed Ponzi, who also, I might add, wrote a new book that's going to be published and come out on the market that I read. I got an advanced copy of it, and that book is ridiculously awesome. The Ed Ponzi Playbook. This is not a dating guide, but it could be. That'd be a perfect title. The Ed Ponzi Playbook. Read this book. It's better than his first book. I loved his first book, and it's better than that one. This has stuff in it that most people don't talk about, how central banks work, and other stuff that you're not going to get from his first book or from most other books about the market. Ed did a great job here. He did a really great job. It's not yet released. I was lucky enough to get an advanced copy of the book and read through it, and it was absolutely spectacular. He has a conversational tone when he writes. It's easy to understand. I read the book in 24 hours, and it was just pure genius. Really, really enjoyed it a lot. I enjoyed it, in fact, more than I enjoyed his first book, although I liked the cartoons in the first book. Okay, let's go back to the charts. Just wanted to get off topic there. Here we go. All right. To answer your question, what am I going to do about this long-term Euro-Swiss idea? This is the red 62 exponential moving average. This is the blue 200 simple moving average. And this is the black and white 800 simple moving average. We're going to look at it on the daily, and then we're going to go from there. This currency pair is ridiculous. It is out of control, and statistically, it is so out of control, and from a statistical point of view, so overdue for a retest of the 800 simple moving average, all the way up in the $1.50, not $1.50, in the €1.50 area, that it's absolutely ridiculous. This currency pair needs a trip back. Where does it all start for me? It all starts if the currency pair can make it back above the red 62 exponential moving average on the daily chart. I might wait that long to start accumulating. When this pair starts to move, it's not going to start to move slowly. It's going to go really, really, really fast. It is not going to be a calm, easy exit for the door. It's not going to do that. It's going to go absolutely insane. But let's go a little bit shorter term. This is the 4-hour chart, and I'm going to look at a top here. And Rudy's stacked and ready. You've got a level of support and resistance right here at 37.50 or so. That level of support and resistance kind of lines up nicely with the 62 exponential moving average on the 4-hour chart. That's another critical level. If we can get past that level, that's another level of accumulation for me between that level and the 200, and that's a lot of points. That's 250 points about. I would love to have trades stacked in between those levels right there. I would love that. Why is that 200 simple moving average useful? It's also a level of support that the Swiss protected at 140. That is a really important level, and a retest of that level. I'm not going to say it's a sure thing, because then somebody's going to go out there and buy a bunch of Euro Swiss and margin call their account. So I don't want that. But if the Euro Swiss goes into this area, this zone right here between 37.50 and 4,000, I would buy the ever-loving crap out of the currency all the way up into that level. You could have maybe, I don't know, stop loss down below. You could dump all this if it goes back down below 36.50. So remember, don't get all crazy on us here, right? Don't get complicated in your order. Don't go nuts and margin call your account. This for me, folks, a trade at 37.50, a trade at 37.60, a trade at 37.70, 37.80, 37.90, 38, 38.10, 38.20, 38.30, 38.40, 38.50, 38.60, and so on, all the way up to 1.40. I don't know, 25 trades spaced 10 pips apart, with a really small lot size. Maybe a lot size so small that you were trading one mini lot for every $25,000 to $30,000 in your trading. Really small. Really, really, really small lot size. That zone is critical. That is a short-term zone, but that once broken above there, we're back into intervention territory where the Swiss were playing around with the currency like it was like it was the Iraqi dinar, right? I mean, they were just whipping that thing around, and we're in crazy territory above that. If it can break above that, and it can rise above that and stay above that for a day or two, then you're looking at easily another 200 to 300 points up, and maybe the full length of that distance beyond where we were at. What if the pair falls? What if this thing doesn't go up? What if this pair actually goes down? Well, let's do a fib range on this thing. Down to 1960, all the way down to 1960 maybe. That's a long way down there. Maybe they just won't protect it, and maybe this thing, the bottom just falls all the way out of it. Maybe it just gets absolutely trounced. Maybe, right? That's the big picture. You want to stay in a trade for 2 years view. Let's get smarter than that, and let's get way smarter than that. Could it get down to, if it does something like that, could it get down to 130? Yeah. That round number is a perfect resting spot if the Swiss don't protect the currency. But if they do protect the currency, anything in between that area and halfway, 132.50, 33, 32.50, they could possibly protect this, and then down at 130, they could possibly protect it. Those would be areas that you could take a look at, that if it were going to go down further, you could maybe take advantage of it. But I'm not selling this currency pair. I'm not selling it. I'm doing what I just said I was going to do. That's it. There is no plan for me. There's no plan B. And if it goes down, this is what I'm going to do. I'm going to stay out if it goes down. I don't want to think that the Swiss National Bank isn't going to protect its euro investment. I'm not going to think that. All right. I'm not going to, okay, well, the Swiss said I'm going to believe them. I don't know anybody that works at the Swiss bank. Although I like to think that Willy Wonka works there. That's what I like to think. I like to think that he's running the Swiss bank. Swiss National Bank. Omar says, thank you, Omar, for your question. What if you trade between 37.50 and 140 and your broker can't open the trade fast enough as it goes up? That's a wide enough range that you're going to get some of your orders triggered. I traded this on intervention before, with FXCM UK, and I've had my orders open. And I've had some of the orders have a problem. But for the most part, I had the orders open okay. Not a big deal. Not un big dealio. Not that bad. Intervention. And Omar, and everybody else, I'm not telling you to trade. Trading is risky. The risks are enormous. People margin call their accounts every day. You've got to contain your risk. You've got to trade at a reasonable lot size. I'm not telling you what you should trade, and I'm not giving you any specific advice, but I am telling you what I'm going to do. All right? And let me back that up for just a moment. Anybody who ever speaks to you about the currency market should be willing to also show you that they trade. I believe in transparency, and I believe that you need to openly ask them if they trade. And that's what I like about Boris Schlossberg. It's publicly available. He and Kathy publish their trading account statement, and they trade. I am a trader. I traded the pound Swiss last night. Put my money where my mouth is. This is my live account, and I went long the pound Swiss last night, and it was probably one of my better trades this year, or set of trades this year. This is my trading account. I'm up a great deal for the day overall, but I do have right now open, my euro trade went negative again. Stupid, idiotic thing. The pound yen, I'm riding two bad buy positions on the pound yen. They're costing me about $6,000 right now. I closed one of those out. I paid for one of my bad pound yen positions with the profits that I made last night. So I'm telling you that I'm going to be trading this too. I'm going to find a way to trade it, and I've talked to Boyke asks, why did I pick the pound Swiss to trade? Because I'm in love with the pound Swiss. It's just the way it is. It's my favorite currency pair. To answer, Keith told you the answer right there. It's all about testing what I feel the most comfortable with and what I've done the best. What I do best at is what I trade. Sometimes I lose money. Sometimes I make money. Let's see. Let's just go back and we'll do one more report, and we'll cycle down through here and we'll take a look at the report. So that's my Euro Swiss idea. Right now, whereas I'm bullish on the Euro Swiss if it goes up. Remember, I haven't started that yet. I'm not buying the Euro Swiss right now. So remember that. Don't get all crazy. I have, however, sold some euro dollars down to 2160. Down to this area right here. You can see, look at this level. There's a support level here, support level here, support level here, support level here, turned into resistance here, turned back into support here, and I think the currency pair is going to revisit that level. No chart right now, but I'm going to pull it up. There you go. There is the combined account statement. These are all my trades for the month of June so far. Single thing I took, the good, the bad, and the ugly. Almost all pound Swiss. And those are my results. My live results. I made $15 in interest, Rudy. Isn't that brilliant? Chris, I had $15 in rollover. Don't you love that? So there you have it. Those are my trades for the month. So I'm really trading. I'm actually doing this. You're not just hearing me talk about it. All right. Now that I've said that, I'll go back to the point that when the euro dollar started to rise up away from the 2160 mark, I did take one trade to get back down to the 2160 mark. And it didn't quite get there over here, and I've been riding this trade coming back down finally. And my target is 2160. Any fundamental reason is the question to trade the pound Swiss or just technical? It's just technical. All technical. All technical. And do I ever trade with the trend? No. I don't even know what that means. Trend on the long term, so what I call counter trend trade. Mostly anything else. Is dollar minute past Treasury Secretary. It's funny, U.S. size Treasury Secretary. I don't know who that is. It's some old guy, Jon Snow. This is George Bush's temporary Treasury Secretary, whose only qualification going into the job was that he had previously run a railroad. What a great business person. Look at the size of those heads. Do you see something? Dollar down, no hair on the head. Dollar up, lots of good bushy hair on the head of Timothy Geithner. Think about it for a minute. You might think it's crazy, but it's not. This right here, also correlation. Timothy Geithner is 11 years old. Jon Snow, 462,000 years old. He actually channeled the former warrior Uthra and can channel that warrior. I don't even know if Jon Snow's still around. No pictures. What? There you go. There's Jon Snow. Don't you love him? 467,000 years old. Methuselah. He used to hang with Abraham down at the corner bar in Palestine. There's Timothy Geithner, 11 years old. Not a bad Treasury Secretary, I might add, Timothy Geithner. A lot of criticism, but he's not that bad. All right, can't see the head. You can't see him? Gosh, what is up with this thing? There you go. Can you see that now? All right. Do I have to end this, or can I keep going a little? I can keep going. He doesn't even pay his taxes. John, are you really going to fault the guy for making a mistake on his taxes? I mean, no, I'm not. And do you think that Jon Snow paid his full taxes? Do you think that Dick Cheney found the way that he could best make sure that every last dime was paid to the federal government? Come on, people. Let's just get realistic. All right, let's look at the euro dollar because I'm tired of dissing Treasury secretaries. Let's do the real thing. Let's talk about actually making money. This is the euro dollar. The euro dollar has some things in its way, and it has some things in its favor. In its way are Spanish banks, right? I mean, the mess of Spanish banks. In its favor is the tendency of the Chinese now to diversify their currency by buying some euro dollars and putting it into their basket. The Chinese didn't lie about what they were going to do. They were partly placating everybody. Sure, they were telling everybody what they were going to do. But the Chinese aren't going to, they are going to buy euros. Last time they said they were going to change their currency regime, they really did it, and they did it immediately. They weren't lying about it. And I don't understand, you know, the Chinese, maybe they're just honest about some things. But if they release it to the world that they're going to diversify a little bit, and they're going to peg their currency to a basket, and they're going to widen the band that it can trade, they're telling you the truth. They're going to do that. They might not do it as fast as Chuck Schumer and Lindsey Graham want, or Timothy Geithner or President Obama want. Oh, I had a dream last night that I met President Obama. Wow, that was weird. And I stayed in a big glass hotel in Las Vegas. It was the Aria, and we stayed on the 212th floor in the penthouse. If anybody interprets dreams, I'd love to know what that meant. But anyway, then I actually sat down and had like lunch with President Obama. Okay, I just remembered that. That's the kind of quality advice and commentary you get from me. Okay, let's look at the picture on the euro. Everything's tightening up here right now on the euro. And we've got a box. We've got a box, a top side and a bottom side. Below the bottom of that box right there, and above the top of that box right there, there's no man's land. This could go a long way. It could go a long way in either direction. Most likely 100 points in either direction if either of those levels are broken. But that's not as interesting to me. What's interesting to me is inside this area right here. What are you doing inside this area? Are you perhaps drawing a retracement inside this area and trading it up? And then when it reaches the top, are you trading it back down? That would be interesting to me. That to me would be a good use of your time. If you started to look at the currency pair from the perspective that it's starting to range a bit, that's another idea right here on that currency pair. I like that idea. But if it falls below 22.04, for example, I think you're going to see this currency pair hit 21.50 very easily, almost automatically and very quickly. So if it even breaks that level, if it even breaks at 21.99, that's another short trade for me, and I'll probably add another position to my trade. Why don't we just do that right now while we're talking? Let's just put that trade in there while we're talking. So we'll go to entry, sell, euro dollar, one standard lot, 22, go to 98, limit 21.60, boom shakalaka, we're done. That's it. So I got one order. I'm pretty much done for the week trading. Might be done for the month trading, so there's nothing else I have in there right now. So I just put that trade in there. You can see it on my screen. Clock Watcher said, you said Japanese yen is a proxy for the Chinese yuan. Do you see that slowing the carry trade? Yeah, there's going to be a slowdown of whatever carry trade was left. There's some weird stuff going on. The Swiss currency was used as a funding currency. It was a low yielding funding currency for the carry trade. And I don't think that's going to last. Derek says he missed the part when I said how it will affect the yen. Does that mean you see the dollar yen going up or just the yen appreciating making the dollar yen fall? I'm a bear on the dollar yen over the course of the next 6 to 7 months, even in the short term. Gosh, I hate it when this hot com thing switches my chart. Okay, hold on. Oh, I just shared the screen. Goodness gracious alive. This is a family program, so I'm not using bad language. I think the dollar yen is going to revisit the high 80s. And I think that it's possible that over the course of 10 months or so, I think the dollar yen could hit 85 very easily, really easily, especially if this low is broken here, this 88. Absolutely, positively think that's possible. We could revisit the lows from 2009, maybe even get to 80. I just think it's a matter of if the Chinese yuan does appreciate, if it does, if it's appreciating, that's gonna bring the yen up. And the Bank of Japan is really gonna be upset about that. I mean, can you imagine that? They never got any of the economic expansion that the rest of the world got because they propped up all the banks and they never let them fail. And they propped up their economy and they tarped their way through the 90s. And they're paying for it now. And they're still paying for it with unemployment and sluggish economy. And they're going to damage their exports further if it's going to damage their exports further if the yen appreciates. So it doesn't have a lot of room for them to go without being upset. Boyke says, what do I think of pivot points? I love them. I love them, Boyke. They're the centerpiece of what I do when I trade. I'll be talking about pivot points, Maud, and the Vortex trade in particular when I go to Barcelona. And I'll be talking about pivot points there. It's the centerpiece of what I do. And I also discuss pivot points in the webinar series that I hold online, the last of which is in July. And you can find information about that at robbooker.com. In the Academy, and this is the last one, and there is actually only one spot left, we talk about the pivot points. That's the centerpiece of the whole trading methodology, is pivot. Yeah, and Boyke, no, I don't show it here. I don't give it to you for free. That's correct. Yeah, right. But I give a whole hell of a lot more away for free, so I'm not feeling guilty about that. Rob, is the Ichimoku cloud popular? Asks F1X Recon. Of course it's popular, because it's a cloud. I mean, it's awesome. It's like drawing pictures on a chart. So it's ridiculously awesome. Super awesome. All right. Super happy to have spent this time together with you. I want to express my appreciation to FX Street for holding the whatchamacallit. Let me get my browser open over here. It is so hard to use my browser on this. Thank you, Maud. Thank you, Vicky. Thank you, Gonzalo. The FX Street International Traders Conference is October 20th, 21st, and 22nd in 2010. I've been there every year. It is an unbelievably good use of your time. I'm not just saying that. It costs money. It's an investment in your future. It's an investment to go and do this. There is nothing like it in the world. There is no expo or conference anywhere like this, and you will make your friends for life. I know that it's expensive. I know some of you can't make it, but I'm just going to tell you now, it's a spectacular gathering of speakers, traders from all over the world. Yeah, and I wrote my ebook, Strategy 10, is now available on electronic book form, $1.99 on Amazon, and it's actually for sale right now. You can get it for your PC, for your Kindle, for your iPhone, or for your BlackBerry, and it's actually number of all books available for the Kindle in the world. It's ranked 153 out of all books on Amazon. So imagine that. And 9 customer reviews. Yes. Thank you, Dave, for writing your review. I appreciate that. All right, everybody. I love spending time with you. Remember, today was really about the Traders Conference. Please take advantage of the chance to sign up at a discount. You're not going to get a chance to sign up at a discount anymore. I'm sure the spots will be filled by the end of the month, probably. It fills up every year, and it's an exceptional conference. Don't pay the full price. Pay the discounted price while you can. Thank you, Maud. Thank you, Boyke. Thank you for being here every time, Boyke.